The S&P 500 weekly chart is where we will start today, focusing on D wave. D wave, up wave 4 will print on a tick lower than 4328.08, and so far this week we have a low of 4329.17, so it's very close. And when it does print, it will satisfy the 38.2 Fibonacci retracement projection level for D wave up wave 4 on this weekly chart, 4327.97. So once that prints, then the D wave up wave is on D wave up wave 5. And here is the S&P 500 daily chart, and as suspected, the 4 shifted over as price had a lower low than this low here. So it shifted over and printed the D wave down wave 3. So D wave is on D wave up wave 5 and D wave down wave 4. And we'll show why I'm saying it must hit the 61.8 Fibonacci retracement level to validate D wave up wave 4 in this daily chart here, as I use closes to anchor the Fibonacci, and we anchor it here at the low of D wave up wave 1, which is this C, and then the close at the high of D wave up wave 1 here. And you can see that this low here was 48.26. So the D wave up wave 2 should retrace 61.8%, and if it doesn't, then it needs to, on this leg of the wave from 2 to 3. So you can see that the 38.2 Fibonacci retracement is at 46.73, and there was a low of 48.28. So it didn't even get under the 38.2. So now we move the Fibonacci retracement over to the low of D wave 3 and the high of D wave 3. So now we have the Fibonacci retracement anchored at the close of the low of D wave up wave 3, which is the close of this 2 where D wave up wave 3 started. And then the high of D wave up wave 3 is where it ended. So both closes, and you can see the Fibonacci retracement is at 42.4312. And the 50% Fibonacci retracement is at 42.99. So right around 4,300 is where I say if it dips under there, I don't think it really necessarily needs to go to the 43.1261.8 retracement. I would start buying a little bit in here. Let's see what happens at 4,300, big round number. If the repricing of the S&P 500 still takes more downside, if it's not enough according to traders and investors, then let's see what happens at 4,300. If it gets under there, then it really does have a good chance to hit the 61.8 at 42.4312. So now we focus on the bottom of the cloud, 26 bars back. For tomorrow we'll be at 42.82.83. So the lagging line hits that bottom of the cloud 26 bars back. It better bounce. If it hits it and continues going under, then we have more downside action to contend with. And I'm still calling the top of this broadening top pattern back here from 2018 that the top line of it in dashed red is still valid. You can see right here it's been support and a lot of resistance here, and it busted out of it. Now it's going to come back down and test it, so that's really the major support for this week. And for this week it will be at 4299.91. So that makes that 4300 level even more important. And for tomorrow, around that area is S2 at 4298. But other than that, the weekly baseline is there too, around 4279.30. That's a steady level for the rest of the week, so 4279.30 on the weekly baseline, 4299.91 on the broadening top and dashed red right here, S2 for tomorrow. And the 50% Fibonacci retracement for D wave up wave 4 is at 4299.90 something, so right there. So let's see what happens at that 4300 level. It could just well bounce off of that. It's well oversold. Let's turn the bands on over in the DeMark chart, and the zigzag has D wave up wave 4 and 3 to have a swing point to the upside would be the next move. But when will that happen? That's what makes that 4300 level very important, maybe a little lower. And then if it does have an updraft from this oversold bounce, we have to give it at least 4 days before we can tell if the swing point happens here at the D waves and then heads up. And the demand line that's qualified at 4425.31 was confirmed on this bar, so qualified and confirmed. Here's the qualified demand projection, 4261.08. So there could be some buying around there. So if it can make it past and down below the 4300 line and then heads down, this is another projection for buying. And then under there is the 61.8 Fibonacci retracement projection level for this D wave up wave 4. And this demand line became qualified with a close below it today. So if it decides to turn around and head back north, if it gets past 4330 and closes above that, then it will be a qualified cancel. If it decides to keep going and again opens below this close and then closes below this close for tomorrow on the 22nd, then this one becomes qualified and confirmed, and we'll get another projection level, and that one will be further down than this one, pretty sure. And price punctured both the lower Stark band and lower Bollinger band, which is a very impulsive move to make that happen. So it's got to catch up with these two bands, or the two bands have to catch up with price. So there might be a bounce. There has to be a bounce eventually. And then the arc down to 0.50 level bumped up 4308.30, so right around that 4300 zone. This should prove to be pretty good support, just like the 0.382 was back here. If it makes it below that, then yeah, we'd keep an eye on that 61.8 Fibonacci retracement projection for D wave up wave 4. Again, it's at 43.12, but then it has to get through the 200 EMA, so that's at 4263.25. And then the 100-day simple moving average, 4375.38 to the upside for resistance.